using volume for risk management and risk assessment. How do you do it? Level beast indicator. This is the market map, right? So we release these levels before 9:15 every day. We give you our trade plan, our context. We've added today's context, and we've also added our primary setups. So you essentially know what our trades are, and then we break down the context of them for SPX, ES, QQQ, and NQ. These are for minis. You can transfer them over to micros on your own. All right, so we're looking at volume. This down here is called the Level Beast VPAX. It's the volume pressure absorption index. You can watch our other videos or go to the site to check it out. We're going to be really looking at this. Now we're showing you a multi-chart view because any trader who's worth their weight in gold, who understands trading, is going to have multi-time frame analysis and multi-chart view. We try to get it into one single view like you have here. And we have 4 primary indicators that show us that. Keeps our screen nice and clean, just like this. All right, so we're going to just pop open here, and we're going to pop open NQ. All right, so we're talking about when to take a trade, how to take a trade, and we're talking about risk, right? A lot of traders don't really train on risk. We do. We've got a full suite of risk training that goes with our indicators. Why? We want you to be successful. We want everyone to use our indicator. You could use it with any system, and we just continue to provide training on that so you can understand. Now, we're going to use the VPAX. We're not going to train on everything on the VPAX. This line right here is not a standard EMA. It is a delta EMA. There is order flow that we're monitoring, and we need to see when Wall Street will be engaged via orders, shares, or contracts, right? Do you see how, and we can check here, and we'll even show you some more harmony here in Confluency. Do you see how the delta EMA turns green or red? From your perspective, it's a teal or coral color. Right, you see there's a little dot, then it peaks up, peaks down, right? And so most traders would just be seeing this move up and down, and that's their cue. But we have what's called a zero line. This is our basis here for contract or share count and engagement from Wall Street. And so this by itself, the VPAX in relation to the zero line, will tell you whether or not you should be putting on heavy risk one way or the other. So here's what happens, right? Let's just do this. Here's what happens. All right, so if you just take a look at the VPAX down here, you'll see the delta EMA moving up toward the zero line here. You see that? It's magnificent. See it? And that happens, obviously, because some shares, or in this case, contracts begin to pile on, hit the tape. Right? But even though there is a reversal zone here, again, this was plotted before the market. I mean, incredible, right? We can identify the exact points for us, exact points where the market will stall, trap, reverse. See, we have a little push up here. Live in the market right now, we do our training live. We're getting a push up here. See, there's the zones. So we know there's orders sitting there, right? And we know that they're going to react. But that doesn't mean the sentiment of the day has changed. Now, the amateur trader or the new trader will just focus on trend and say we're going down. And, you know, that's fine. But you need to understand what pushes us down in the sentiment. So we look at the delta. And what we're saying is this sentiment, very simply, has not changed until we hit that zero line and we hold, period. Even if it peaks upward. Now, a scaled trader, for sure, could take this retracement, for sure. Just know that the sentiment has not changed. Why and how does that help you? You know the proper risk, and you know which side should dominate your trades. Your puts or shorts should dominate the trades today, at least for the morning session, because the volume told you so. This isn't make-believe. You're not making something up. You're not blindly following some YouTube guru or someone who, no, you're simply looking at volume and you're saying, all right, well, I can see by 8:45, I really start to take a dive. And quite frankly, the levels here in-house, we had our level identified, right? Well, once we saw this pivot here at 8:30, going into 8:45, that's a short all day long into the open. That's a short, right? It's off. This is a reversal zone to the downside. Therefore, it got the confirmation. By the time the market opens, we're underneath our LIS. You guys understand what that is. So we've got 2 points of confluence. But more importantly, for the sake of this training, we can clearly see the delta EMA is moving underneath the zero line, right? So when it starts to move underneath the zero line, even when the stock does get some buy-ups, if we don't reclaim that, then we know the sentiment is still bearish. Sell orders are still bombarding the tape, and puts or shorts should dominate my trade decisions, right? And that's what catches a lot of traders. They're trying to catch a bounce, or they keep trading against the sentiment, or what traders would say against the trend, in hopes to catch the reversal at the right time, when all you really have to do is trade with Wall Street and understand when the sentiment shifts, you'll know it. Why? You'll see the shift in volume and delta, and it will push and reflect itself off of a variance zone in the market. So we're not saying you can't take retracements. No way. You're looking at a 15-minute chart. These are 15-minute bars. This is NQ. So you have a lot of play here. If we were to go down maybe to the 5, you can see you get a 4-bar break, 3-bar break. That's enough to make some substantial money, right? 29963 30083, right? So we're talking about 30 points on these moves here, right? If we were to go down to the 1 minute, it becomes even more evident. Double bottom. Now, we want to highlight something. These levels, again, they're posted before the market, right? This isn't, automated. This is a team. We trade them. And our thought process was, why don't we just release them to the public? That's what it is. So regardless of someone, if a person grabbed this or not, we would still make it available because we're doing it, right? We're using it. And here's what we're saying. When you look for the points of confluence coupled with volume, that is going to help you with your risk. So risk is defined as how much money you want to put on, but it's also how you protect your position of your portfolio as well as your current trade. It's also how much time you are spending in the market and in a trade, right? That all of that is a risk component. And so what we're saying is, you look at the markers here on the one, we've got a double bottom. I mean, we're always impressed. We're always impressed. Look at that. That's like magic. That's crazy. We're always impressed, right? A lot of times we see little stuff like this, right? Where it kind of tests it and then hard buy up, right? We're impressed with that too, but this makes us really impressed. All right, but now we're on the 1 minute. So keep that in mind. We're just on the 1 minute. This is your entry point. This is not your assessment point, all right? This is simply your entry point, right? If you were to go up to the 5, you could see a little more structure there, right? 3, a little more structure. 5, you can see it's a clear break to the upside. You got multi-candles, you clear your key levels. But even in that, once you start getting to a higher time frame, look, the delta EMA never crosses the zero line. Therefore, I don't care what happens here, how many bars you get. Until you see this, you're not going to get a shift in sentiment. Yes, this can be a trade, and it doesn't mean that you're late to a trade, because very likely, if you don't see this clear, very likely you're going to see another move to the downside or a retracement to the downside, and it will give you another opportunity to get in. All right. So here's the simple rule of thumb. Wait for the delta EMA to cross the zero line, just like we cover in training. We cover this in the masterclass. The first 4 modules are free. You can keep the setups. We give you multiple setups in each training. We have 2 other bonus modules there. If you haven't caught the live, you can get it on demand, or we do a deep dive into trading, our setups, and how to use our indicators with any system so that you can go to the next level. That's really it. That's how you use volume to assess risk when you're in a trade. We start with the higher time frames. We're looking for structure. Obviously, we've got our levels and zones that they're the level based market map automatically. Once you click update, we publish our levels and our trade plan. And then the level based VPACs, It's going to give you when the volume sentiment based on actual orders is going to shift. Then, of course, you can go down to the 1, 3, 5, whatever you like. And that can be your intermediary targets or your smaller time frame for your shorter scalps or moves. But just know, until you see this shift here, then you know the sentiment and the dominant move of the day, the dominant order flow hasn't changed. So that prevents you from trading against the trend. That prevents you from trading against, Wall Street, right? And that helps you for the long haul. So this has just been a quick training for risk, right? To prevent going against the trend that day, to know when the market sentiment will shift, and to understand that if you do take these intermediary trades, these scalps in between the longer moves, it's not a long hold. You're taking it to your target and that's it. But what should dominate? Well, what's going to dominate is what the volume tells you. We're under the zero line. Therefore, sellers are in control. And you knew that right out the gate, right? So we'll do another training to show you how to trade the open with the level beast ecosystem and our indicators. And that'll take you to another level. Until then, guys, as always, happy trading.